Hello everybody, my name is Kai and I am a mortgage broker in Calgary, Alberta. I specialize in helping people exploring alternative mortgage solutions when they have been denied by the traditional banks. And today I want to share with you a little bit about the two very important ratios when it comes to applying for your mortgage, which are the GDSR and the TDSR. The GDSR is also known as the gross debt servicing ratio, and the TDSR is total debt servicing ratio. These two ratios are very similar with one main difference. The gross debt servicing ratio is the relationship between the housing cost and your income. The total debt servicing ratio is the relationship between your income and the total of the housing cost plus any outstanding consumer debt that you have, whether if it's a car loan or a credit card payment or student loan. To calculate these two numbers, it's very simple. You would take the monthly mortgage payment, which is the principal plus the interest. You add onto it the property tax, so per month, and then the heating cost, which is about $100 a month. And if you have any condo fees, you take 50% of the condo fee. You add them all up and then you divide it by your income. Now, if you are an employee that you earn an hourly wage or a salary, you would divide it by your gross income, so before tax income. But if you are a self-employed individual, you need to divide that by your net income. That would give you a number, and that number, the guideline, has to be 39% or less. Now, with the total debt servicing ratio, the formula is very similar. You take the principal, the interest, the property tax, the heating cost, the condo fee, 50% of the condo fee, and then you add on any outstanding consumer debt that you have. And then again, divide it by your gross income if you're an employee and by your net income if you are a self-employed individual. And you will get a number for the TDS, the total debt servicing ratio, and this number gotta be at 44% or less. Please keep in mind these two figures are as per the guideline. If your ratio is a little bit higher than the 39% for the GDS and 44% for the TDS, it does not mean that you cannot get qualified for that mortgage. It just means that we're gonna have to ask for an exception, and the bank will look at your entire application, your financial situation, and determine whether or not they're going to grant you that exception. Now, when it comes to alternative lending, the GDS and TDS, you can have between 50% all the way up to 65% depending on your situation. With the higher allowable GDS and TDS ratios, you will be able to borrow a bigger mortgage, and this can translate into you can get into a house that a little bit more decent, that you don't have to put a lot in to repair. Or if you're buying an investment property, this could mean buying a better income producing property. As always, if you have any question regarding mortgages, please reach out, let me know, send me a text message, give me a call, and I'm always happy to help. Thanks again for watching, and I'll see you in the next video.